Good morning, friends. In our last lecture, we discussed the manner of computation of income from let out property. Let us continue with that. There are some points which I need to highlight. Points requiring attention. Point 1. See where the house property is located outside India, where the house property is located outside India, assessee, who is the owner of the property, is a resident and ordinarily resident, and his global income is taxable. Okay, and this house property which is let out is fetching some rental income to the assessee. From this rental income comes. This is a basic input for computing gross annual value. It is an input for computation of gross annual value. This should be this is in foreign currency. This is in foreign currency. This should be converted into Indian rupees. Why? Because for computing the taxable income, we need to include this rental income, okay, which is in foreign currency. I should convert that into Indian rupees. This is converted into rupees. Converted into rupees using telegraphic transfer buying rate quoted by SBI. Using the telegraphic transfer buying rate quoted by SBI. You should know what is telegraphic transfer buying rate. See, telegraphic transfer quoted by SBI, and which telegraphic transfer buying rate which is prevalent as on the last day of the previous year. Prevalent as on the last day of the previous year, of the relevant previous year. Our previous year 1920, what is the last day? 31st March 2020. On that day, what is the telegraphic transfer buying rate quoted by SBI? That should be used for converting it into Indian rupees. Before that, let me explain you what is telegraphic transfer buying rate, etc. This is given in rule 115. But before that, you should use what is telegraphic transfer buying rate, selling rate, etc. Note, SBI is a dealer in foreign currency. It is a dealer in foreign currency. it will be purchasing the foreign currency and selling foreign currency to the customers. From the customers, it will purchase what? Foreign currency. Purchases foreign currency. And to the customers, it sells foreign currency. It sells foreign currency. The rate quoted for purchasing is called telegraphic transfer buying rate. Rate quoted for purchase is called telegraphic transfer buying rate. The rate quoted for sale is called selling rate. Rate quoted for sale of foreign currency is telegraphic transfer selling rate. So, when SBI purchases foreign currency, say $1, the payment is 65 rupees in Achikla. $1 is equal to 65. This is telegraphic transfer buying rate. When it is selling $, the rate is $1 is equal to 65.6. This is the selling rate, telegraphic transfer selling rate. So, buying rate is the rate for which it is purchasing the foreign currency. Selling rate is the rate for which it is selling the foreign currency. This is the example. Now, when we are getting rent in foreign currency, we will sell it to SBI for some rate. That rate is what SBI is purchasing. That means we should take only telegraphic transfer buying rate. So you should convert the rental income into foreign Indian rupees using telegraphic transfer buying rate quoted by SBI prevalent on the last day of the relevant previous year. On 31st March 2020, what is the telegraphic transfer buying rate quoted by SBI? That rate should be used for converting the rent for the entire year. This is point number 1. Point number 2 is this. See, landlord is there, tenant is there. Landlord lets out the house property. For that, the tenant pays some rent. Assume, in addition, tenant also makes payment. In addition, tenant also makes payment for discharge of some obligations of landlord. Makes payment for discharge of some obligations of landlord. This is not payment made directly to the landlord. but makes payment for discharge of some of the obligations of landlord. So there are some obligations of landlord which is discharged by the tenant, discharged by the tenant. For example, the electricity bill of the landlord is also borne only by the tenant. Telephone charges of landlord is also borne only by the tenant. Okay. The school fee for the children of the landlord is paid by the tenant. That means the tenant, in addition to paying rent, is also discharging the obligations of the landlord for which he is making payment. This payment should be treated as constructive payment to landlord. This is constructive payment to landlord. This is constructive payment to landlord. That means while computing the actual rent received or receivable, while computing the actual rent received or receivable, even payment made by landlord, by tenant, payment made by tenant for discharge of obligations of landlord shall be included. Shall be included. That is also rent. While computing the AR, even payment made by tenant for discharge of obligations of landlord shall be included. That means it will be reflected in GAV. It will be reflected in GAV. Point number 3. Repairs to the house property. Borne by tenant. Borne by tenant. Here there are two possibilities. Repairs obligation of tenant as per the terms of contract, as per the terms of agreement. Repair is the obligation of the tenant. Tenant has to bear. The agreement clearly says so. Repairs is obligation of landlord. As per terms of agreement. As per terms of agreement. There are two possibilities. Agreement says it's the responsibility of tenant. No, it's the responsibility of landlord. Whatever be the case, it is only borne by the tenant. In this case, what will be the tax implications? In situation 1, assume the agreement says it is obligation of the tenant borne by the tenant. Then in the hands of landlord, no tax implications. Why? Obligation of tenant met by tenant. No tax implications. No. In the hands of tenant, what will be the implication? In the hands of the tenant, the implications are as under. I shall ask you the purpose of occupation. Purpose of occupation. For what purpose tenant is occupying? Residential purpose. For business or profession, that is commercial purpose. Commercial purpose. When it is occupied for residential purpose, the repair expenses borne by the tenant, no tax implications in his hands. If it is borne by the tenant and the purpose of occupation of the property is commercial purpose, then repairs are deductible under section 30 while computing his business income. While computing his business income, it is deductible. Repairs are deductible under section 30 while computing his business income. So, repair expenses are borne by the tenant and is obligation of the tenant. This is situation 1. Situation number 2. Repair expenses are obligation of the landlord borne by the tenant. In the hands of landlord, repair expenses are treated as constructive payment to landlord. Met by tenant is treated as constructive payment to landlord. It is included in computing ARR, actual rent received or receivable. Repair expenses borne by the tenant is constructive payment to landlord. It is included in actual rent received or receivable. This is implication in the hands of the landlord. In the hands of the tenant, this is also rent. The repair expenses is also, why should he bear repair expenses? That is also consideration for using the house. Discharge of repair obligation of landlord is also consideration for using the property. Using the property. That is also to be treated as rent. That is to be treated as rent. Here in this case, The purpose of occupation. Purpose of occupation, residential purpose. Here the purpose of occupation is business or profession, commercial purpose. Commercial purpose. Where the occupation is for residential purpose, commercial purpose. Space is not there, A, B. Where it is for residential purpose, since it is rent, there can be deduction under 80 GG. Deduction could be enjoyed under 80 GG subject to conditions there, stipulated there. I will discuss in chapter 6a. Deduction could be enjoyed under 80 GG. B. The purpose of occupation is residential purpose, commercial purpose, deductible under 30. Deductible under section 30 while computing income while computing business income. While computing business income. Deductible under 30 while computing business income. So, discharge of repair obligation is also consideration for what? Using the property. Why the obligation of the landlord should be discharged by the tenant? That is also a consideration for using the property. That is also rent. If you are using the building for residential purpose, the rent is allowed as a reduction under 80 GG subject to conditions. If you are using it for business or profession, it is eligible for reduction while computing business income. While computing business income, that you need to note. So, this is point number 3. Point number 4. Point number 4. Where landlord tenant to the tenant, landlord is letting out a property. Not only is letting out the property, he is providing various services to tenant. Various services are also provided to the tenant. And the consideration that is paid by the tenant to the landlord is composite. A composite rent is paid. Composite rent is paid, which is having element attributable to property which is having element attributable to service. Element attributable to services. the element which is attributable to property shall come to the head IFHP. Element attributable to the services should go to the head PGBP. If it cannot be taken to the head PGBP, it will go to the residual head IFOS, where the services are rendered on a systematic and organized basis with an intention to make profit. It will go to the head PGBP. Otherwise, it will go to the head IFOS. It will go to the head IFOS. I'll give you an example. SSR is owning a very big shopping complex. Is owning a shopping complex. There are various commercial units. These commercial units are let out by SSR. These commercial units are let out to various shopkeepers. These are let out to shopkeepers. And not only that, just commercial units are not only let out. The owner SSR is providing various services like services of sweeper, toilets and sanitation, lift, air conditioning, parking space, security and surveillance through CCTV, security and surveillance, etc., etc. Various services are provided. So the shopkeepers, they pay a composite rent. This composite rent attributable to house property. This composite rent attributable to house property, that is the commercial units, shall go to the head IFHP. The composite rent attributable to services will go to PGBP. Why? Because these services are rendered on a systematic to the shopkeepers on a systematic and organized basis. On a systematic and organized basis, with an intention to make profit. With an intention to make profit. Therefore, it shall go to the head PGBP, not IFOS. But if this is not the position, then it shall go to the head IFOS, residuary head. So, where composite rent is charged for building as well as for the services, amount attributable to services should go to the head PGBP, if not possible to the head IFOS. To the head IFOS. Here, in composite rent only, there is a version 2. This is composite rent version 1. Composite rent version 1. Now we are going to discuss about composite rent version 2. What is that? I'll tell you. Landlord is there. This landlord lets out building to the tenant and also lets out other assets. Lets out other assets under an inseparable agreement. These two are let out under an inseparable agreement. Under an inseparable agreement. Under inseparable agreement. What is inseparable agreement? Letting out of building and other assets are inseparable. The tenant cannot say, I want only building, I don't want other assets. Or he cannot say, I want only other assets, I don't want building. Okay, you need to take both. Under an inseparable agreement, building and other assets are given on rent. The tenant pays consideration for both building as well as other assets. A composite rent is paid. This composite rent will not come under the head IFHP. Will not come under the head IFHP, this is sure. And a subject matter of hire is a complex one. Subject matter of hire is a complex one. Is a complex one. This is not just building. This is not just building. It is building as well as other assets together they are let out. So IFHP will not come. it has to come under PGBP. If it cannot be fitted there, it has to come under the head IFOS. It has to come under the head IFOS. I'll give you an example to understand this. See this. There is a company X Limited. This company is manufacturing product X. The demand for the product has fallen below the shutdown point. During the previous year, demand has fallen below the shutdown point. The demand has fallen below the shutdown point. What is shutdown point? That is the level of demand where it will be advisable to keep the factory closed rather than keep it open. So management stops manufacturing operations. Manufacturing operations were stopped. But fall in demand is a temporary phenomenon. However, the fall in demand is a temporary phenomenon. In a year's time, the demand will certainly improve. In a year's time, demand will certainly improve. The business is not closed. Business is only suspended. Business is only suspended. It will be revived in the future. It will be revived in the future. Even during the period of closure, there will be some unavoidable fixed cost. There will be unavoidable fixed cost like factory rent, etc. Not only that, skilled employees shall be retained and fed. During this period, shall be retained and fed during this period. So there is unavoidable fixed cost. Further, since the business is going to get revived, it is advisable to keep the factory in working condition. Since the factory is going to get revived, the factory operations are going to get revived. It is advisable to keep it in working condition. So what the management did, the company X Limited, the management lets out the property, leases out the property to Y Limited. X Limited leases out factory building along with plant and machinery to Y Limited under an inseparable agreement. Under an inseparable agreement. Under an inseparable agreement, this is leased out for a composite rent. For a composite rent. Certainly this composite rent will not come under the head IFHP. It will come under the head PGBP, not under the head IFOS. Reason is, letting a factory building along with plant and machinery is subservient to business. Letting out of factory building, letting out of factory building along with plant and machinery, along with plant and machinery is subservient, incidental to business. Aim is to revive the business. Rent received could be used for meeting unavoidable fixed cost and salary of skilled employees. Salary of skilled employees. Therefore, it should go to the head PGBP. It should go to the head PGBP. Note, to invoke the head, the business should exist, na? Business exist in dormant mode. It exists in what? Dormant mode. Exist. It's not closed. It exists, but it is only suspended. Not. In the above example, In the above example, if the drop in demand is permanent, and there is no chance of bounce back, no chance of bounce back. In the above example, if the drop in demand is something permanent and there is no chance of bounce back, since the product is in the last stage of its life cycle, since the product is in the last stage of its life cycle, then the composite rent goes to the head IFOS. In the above example, if the drop in demand is permanent and there is no chance of bounce back of demand, why? The product is in the last stage of its life cycle. Okay, the product has taken birth, it is growing, it is maturing, then it is declining. Last stage, okay, the product will be replaced by a new one in the market. So it goes, it wipes off, it gets wiped off. Then in that case, our business is gone. There is no chance of revival of business. Here when we lease out, that is an independent source of income for us. This is not something incidental or subservient to business. Upon the composite rent will not go to the head PGBP, it will come to the head IFOS. It will come to the head IFOS. This is the tax treatment of composite rent. So composite rent version 2, okay, it will come either to the head PGBP or to the head IFOS, but not to the head IFHP. This is one point. Point number point number 4 is over. Now we enter into point number 5. See, while computing the actual rent received or receivable, unrealized rent is reduced. URR means what? Unrealized rent. Unrealized rent is reduced in arriving at actual rent received or receivable. Actual rent received or receivable. This reduction is subject to fulfillment of following conditions. Stipulated in Rule 4. Rule 4 la conditions irukappa. If these conditions are fulfilled, then only the unrealized rent is reduced in arriving at the actual rent received or receivable. That's why in the problem also conditions stipulated in Rule 4 are fulfilled, like this it is given. What are the conditions? Condition number 1. The tenancy is bona fide. It is not just for pulling down the annual value. Okay. By showing unrealized rent. Tenancy should be bona fide. tenant is vacated from the house property, is not paying and is staying in house, nothing could be done. Tenant is vacated from the house property. Tenant is not in occupation. Tenant is not in occupation of any other house of the owner. The tenant is not in occupation of any other house of the owner. All legal steps are taken for recovery of rent. They failed. All legal steps are taken for recovery of rent, but they failed. If these conditions are fulfilled, the unrealized rent is reduced in arriving at the actual rent received or receivable. Actual rent received or receivable. So tenancy is bona fide. Tenant is vacated from the house property. Tenant is not in occupation of any other house of the owner. All legal steps are taken for recovery of the rent, but they failed. So this is another point I wanted to communicate. Point number 6. While computing income from house property, interest on borrowing is allowed as a deduction. Interest on borrowing is allowed as a deduction. Interest on borrowing is deductible under 24 class B. This you know. Mr. X purchases house property from Y. Part of the consideration a part paid a part is outstanding. A part is outstanding. On this outstanding part, X pays interest. Pays interest on outstanding part. While computing income from house property in the hands of X, this interest on outstanding part is also deductible under 24 class B. Note, essence interest on outstanding purchase consideration Interest on outstanding purchase consideration is also deductible under 24 class B. Is deductible under which section? 24 class B. This is deductible. Interest on outstanding part is also deductible. We have not borrowed, but we owe money, na? On that if we pay interest, that is also deductible. So this is point number 6. Point number 7. RSN has taken loan from SSR invest in house property. And this house property is let out. The house property is let out. From that, RSN is earning some rent. RSN is earning rent. So gets loan and is investing in the house property which fetches him some rent. No doubt, interest on this loan is deductible. This happened. But during the relevant year, SSR wants his money back. So from M of J, RSN takes a fresh loan RSN takes a fresh loan. That amount is used for repayment of the original loan to SSR. RSN repays SSR. So this fresh loan was taken for repayment of original loan. Taken for repayment of original loan. Original loan. Now the issue is whether interest on fresh loan deductible under 24 class B. Why the doubt comes, you should understand. Only when you take loan for purchase or for construction or for repairs or renewal, that interest will be allowed as a deduction. But this loan was not taken for purchase or for construction or reconstruction, repair or renewal. It was taken for repayment of the original loan. Original loan. So we should answer whether the interest on fresh loan is deductible. Answer is yes. This fresh loan steps into the shoes of original loan. It steps into the shoes of original loan. If the original loan was taken for purchase etc. of the house property, the The fresh loan is also deemed to be taken for only for such purpose. The fresh loan is also deemed to have been taken for such purpose. If the original loan was taken for purchase etc. of the house property, the fresh loan is also deemed to have been taken for such purpose. Therefore, the interest on fresh loan is deductible. Interest on fresh loan is deductible under 24 class B. Under 24 class B. This is based on CBDT circular. Point number 8. Deduction under 24 is exhaustive. No expense other than those covered in 24 is deductible. While computing income under the head house property. While computing income from house property. It is exhaustive. What is the significance? I'll tell you. What is the significance? I'll tell you. Listen to me. Owner incurs repair expenses. Owner incurs repair expenses. Owner incurs insurance premium. He insures the building. These are all not deductible. Reason is not covered by 24. Not covered by section 24. Not deductible. Not covered by section 24. This you need to note. Only those expenses which are specifically mentioned in 24 are eligible for deduction. While computing income from house property, no other expense is allowed as a deduction. This is point number 8. Point number 9. Listen to me. Chennai Properties and Investments Limited, Supreme Court. The facts of the case are as under. Asasi is a company as per the memorandum of association of the company. Asasi is a company In the memorandum of association, of the company, if you see the object class, in which the main object for which the company is created is to acquire and let out properties. Main object is to acquire and let out properties. This is the main object for which the company is floated. Substantial income of the company is only rental income. Substantial income of company is only rental income. It is only rental income. Then this rental income goes to the head PGBP, not IFOS, not IFHP, not IFHP. And the very business of the company is letting out. This is the business. Letting out properties is business of the company. Is business. Where, as per the memorandum of association, the main object is letting out of the property. Okay, and substantial income is only rental income. Okay, then letting out is business. It should go to the head PGBP, not to the head IFHP, not to the head IFHP. This has been held so by the Supreme Court in Chennai Properties and Investments Limited. Investments Limited. Fine. Now, point number 10. Point number 10. We have section 23 class 5. What it says? Assessee is a builder or a developer for him the building is stock in trade. Meant for trade sale in the ordinary course of business. Building is stock in trade. Assessee is a builder or a developer. The building is stock in trade. This building is let out. This building is let out until it is sold. This building is let out until it is sold. Then the rental income should come to the head IFHP. Rental income should go to the head IFHP. Should go to the head IFHP. There are so many judgments that it should come to the head IFHP. But if it is vacant, it is lying vacant, not sold. Still that building will have inherent rent earning capacity expressed in monetary terms, na? The annual value will be taxed. But a relaxation is given, it is vacant. Here space is not there, connector. If it is vacant, for a period of 2 years from the end of the financial year in which the completion certificate was obtained from the competent authority. 2 years from the end of the financial year in which completion certificate was issued by competent authority, the town planning authority. Once you construct the building, okay, you need to get water connection, power connection, etc. Na? Before that, you need to get a completion certificate from the municipal corporation, from the competent authority, from the year in which the completion certificate was obtained within a period of 2 years. In this time period, if it was vacant, then for this year, the annual value of the property is nil. For this period, the annual value is nil. Okay, this is the relaxation given in 23 class 5. But this relaxation is only for a period of 2 years. Thereafter, even if it is vacant, annual value will be taxed. Annual value is not nil. Annual value is reasonable expected rent. It is what? Reasonable expected rent. That is taxable. That is taxable. So, what we are trying to tell is where the property is vacant for a period of 2 years, vacant during a period of 2 years from the end of the financial year and which completion certificate was issued by the competent authority. For this period, annual value will be taken as nil. So, where assessee is a builder or a developer and the building developed by him is a stock in trade, correct? If it is let out until it is sold, rental income comes to the head IFHP. If it is vacant and the vacancy is during a period of 2 years from the end of the financial year and its completion certificate was issued by the competent authority, the annual value will be taken as nil. This is a relaxation. But the relaxation is only for a period of 2 years. Thereafter, if it is vacant, still the annual value will be computed. The GAV is equal to RER. It will be taxed. It will be taxed. So, this is section 23 class 5. 23 class 5. And this 2 years, earlier it was 1 year. It is Finance Act 2019 change amendment. Market important. Could be tested. Sorry. Till now what we discussed is let out property. Computation of income from what? Let out property. Now we enter into the discussion on self-occupied property. Property self-occupied for residential purpose. Self-occupied for residential purpose. Self-occupied for residential purpose. Here, if it is self-occupied for residential purpose, section 23 class 2 subclass A says annual value is nil. Net annual value is nil. If the property is self-occupied for residential purpose, the net annual value is nil. Interest on borrowing alone is allowed as a deduction. Interest on borrowing is allowed as a deduction. 24 class B. Interest on borrowing is allowed as a deduction. So from the self-occupied property, there could be loss from house property, or there could be zero income. There could be zero income. The net annual value is nil. The interest on borrowing is deductible, but this deduction is subject to a ceiling. Subject to a ceiling. And when I say net annual value itself is nil, municipal taxes paid is ignored. Municipal taxes paid is ignored. It is not relevant. Why? Because we assume the net annual value itself as nil. Where the property is self-occupied for own residence, annual value is nil. Okay, we are telling annual value is nil. This is called self-occupied property benefit. This we call as what? Self-occupied property benefit. Self-occupied property benefit. What is self-occupied property benefit? Annual value, net annual value nil. Okay, that is self-occupied property benefit. Interest on borrowing is allowed as a deduction, but subject to a ceiling, not fully allowed, subject to a ceiling, it is allowed as a deduction. So this you need to note, this you need to note. Another important point is note 2. This property for which the annual value is taken as nil, this self-occupied property benefit is available only if the property is not let out throughout the previous year. For obtaining the self-occupied property benefit, self-occupied property benefit, the property should not be let out. The property should not be let out throughout the previous year. Throughout the previous year. Adina, technically speaking, even for one day if the property is let out, even if the property is let out for just one day, self-occupied property benefit is gone. Self-occupied property benefit is gone. Example, house property in the previous year 1920, in the year 1920, the property was let out during April and May. During April and May. And it was self-occupied during 1st June 2019 to 31st March 2020. For this property, self-occupied property benefit is not available. This property is not entitled to self-occupied property benefit. Why? Because it was let out for 2 months. It should not be let out throughout the previous year. Then only self-occupied property benefit is available. Here it is not so. It was let out for 2 months. Therefore, self-occupied property benefit is not available. Note 3. Self-occupied property benefit is available even to HCF. Self-occupied property benefit is available even to HCF. Self-occupied property benefit is available even to HCF. And it consists of natural persons. Natural persons. All are individuals. In a HCF, all are individuals. They are either related, blood related, or through marital tie, or through adoption. So therefore, there is no problem in HCF enjoying self-occupied property benefit. There is a property belonging to HCF where family members are only residing. Annual value is nil. Annual value is nil. Any assessee other than individual or HCF, is not entitled to self-occupied property benefit. Not entitled to self-occupied property benefit. This is decided so by in Hari Prasad Bhojanagarwala, Gujarat full bench. Full bench judgment. So this you need to know. All these things will be comfortable only when you understand what is self-occupied property benefit. If you are occupying the house for your own residential purpose, the annual value is nil. Net annual value is nil. Even municipal tax is ignored. Only deduction is interest on borrowing. That too subject to a ceiling. We will discuss the ceiling. No worry. Subject to a ceiling. Now let us discuss about the ceiling. Ceiling. Here, for understanding the ceiling, purpose of borrowing. Purpose of borrowing is purchase, construction, or reconstruction, repairs, or renewal. You borrow money for repairs or renewal of a house property which you are using for your own residence. On that borrowing, interest is allowed, but the ceiling is 30,000. The deduction under 24 class B cannot cross 30,000. The deduction under 24 class B cannot cross 30,000. Where the purpose of borrowing is purchase, construction or reconstruction. Date of borrowing. The date of borrowing is before 1st April 1999 on or after 1st April 1999. When it is before 1st April 1999, even if you borrow for purchase, construction or reconstruction, the ceiling is 30,000. The deduction under 24 class B cannot cross 30,000. Cannot cross 30,000. Where the borrowing is on or after 1st April 1999, space is not there. I will continue the next page. Connector A. Where the borrowing is on or after 1st April 1999, then in that case, we shall ascertain the gap. What gap? I'll tell you. Gap means gap between end of the financial year of borrowing in which financial year we borrowed. Gap means gap between the end of the financial year of borrowing and the date of completion of construction or purchase. The date of completion of construction or purchase. The house property. Gap means gap between the end of the financial year of borrowing and the date of completion of construction or purchase of the house property. This is gap. This gap is not more than 5 years. This gap is not more than 5 years. No, this gap is more than 5 years. Where the gap is not more than 5 years, in such case, the ceiling is rupees 2 lakhs. Where the gap is more than 5 years, the ceiling is 30,000. Ceiling is 30,000. Where the gap is not more than 5 years, ceiling is 2 lakhs. Where the gap is more than 5 years, the ceiling is 30,000. Here, certificate from lender specifying the loan amount and interest shall be obtained certificate from the lender specifying the loan amount and interest shall be obtained. This is for enjoying enhanced ceiling. To consolidate, Ceiling in respect of interest on borrowing depends upon the purpose for which you borrow. Purpose of borrowing is purchase, construction or reconstruction, repairs, renewal. Ceiling is 30,000. Where purchase, construction or reconstruction, we will see the date of borrowing. If it is before 1st April 1999, the ceiling is 30,000. On or after 1st April 1999, okay, then we will see the gap between the end of the financial year of borrowing and the date of completion of construction or purchase of the property. If the ceiling is not, the gap is not more than 5 years, ceiling is 2 lakhs. Otherwise, the ceiling is 30,000. Certificate from lender specifying the loan amount and interest shall be obtained. So this is there. This is the ceiling. Now, this is note number 4. Note number 5. Note number 5. Pre-construction period interest 1/5 plus post-construction period interest of the relevant previous year put together should not cross the ceiling. Should not cross the ceiling. So 1/5 of the pre-construction period interest plus post-construction period interest of the relevant previous year put together should not cross the ceiling. This is note number 5. Note 6. Deduction under 24 class B can never cross rupees 2 lakhs. Can never cross rupees 2 lakhs. Okay, I'll tell you this way. You would have borrowed for construction of the property and repairs of the property also. You would have borrowed money for purchase of the property at some point of time, and at a different point of time you would have purchased for repairs. So in this case you pay interest for borrowing on repairs, you pay interest on borrowing for purchase also. Then separate ceiling la illa. The interest put together deductible under 24 class B cannot cross 2 lakhs. Cannot cross 2 lakhs. Note number 7. Note number 7. Here, where multiple houses are under self-occupation, where multiple houses owned by the assessee are under self-occupation for residential purpose, or under self-occupation for residential purpose, where multiple houses owned by the assessee are under self-occupation for residential purpose, then the assessee can enjoy assessee can enjoy self-occupied property benefit. Self-occupied property benefit for any two house properties of his choice, where multiple houses are under self-occupation for residential purpose, then the assessee can enjoy self-occupied property benefit for any two houses of his choice. This is Finance Act 2019 amendment. Market important. I'll give you an example to visualize. See this. Assessee is SSR. Assessee is SSR. SSR is having three houses. Owns. All these three are under self-occupation for residential purpose. All these three are self-occupied for residential purpose. Very big family it seems. These are self-occupied for residential purpose. All these three are self-occupied for residential purpose. Now the assessee is having options. Option 1, these two can be treated as self-occupied property and this is deemed to be let out. DL1 and deemed to be let out. These two are treated as self-occupied. This is deemed to be let out. Option 2, these two can be treated as self-occupied. This is deemed to be let out. These two are treated as self-occupied. This is deemed to be let out. Thus, options are there. There are three options. Treat house 1 and house 2 as self-occupied, house 3 as deemed to be let out. Treat house 1 and house 3 as self-occupied and house 3 as deemed to be let out. Treat house 2 and house 3 as self-occupied and treat house 1 as deemed to be let out. Compute the income from house property in each of these options. Select that option where the income from house property is least. Select that option where income from house property is the least, or in case of loss, select that option where loss from house property is the highest. The loss from house property is the highest. select that option where loss from house property is the highest. Select that option where income from house property is the least. Our aim is to have less tax. When the tax will be less? Only when the total income is less. When the total income will be less? When the income from house property is least. Or if there is loss, if the loss is more, the total income will become less. Total income less, tax will become less. So we should compute under a different option. Select that option where income from house property is the least or loss from house property is the highest. Note. Even though the assessee can enjoy self-occupied property benefit in respect of two houses, the deduction under 24 class B in respect of these two houses can't cross the ceiling of rupees 2 lakhs. The aggregate deduction under 24 class B in respect of these two houses can't cross the ceiling of rupees 2 lakhs. Even though assessee can enjoy self-occupied property benefit in respect of two houses, the aggregate deduction under 24 class B in respect of these two houses can't cross the ceiling of rupees 2 lakhs. That you need to note. Cannot cross the ceiling of rupees 2 lakhs. That means even though self-occupied property benefit is available for two houses, the ceiling has not increased. Ceiling is for both the houses. The ceiling is in respect of both the houses. That you need to note. Fine. Before we proceed further, let us solve some questions in self-occupied property. Then we will come to the concepts again. Illustration number 6 only I will do again. Earlier we assumed it was let out. Now I am assuming it is self-occupied. Illustration 6, Institute Study Material. Purna has one house property at Indira Nagar, where in Bangalore. She stays with her family in the house. The rent of similar property in the neighborhood is 25,000 per month. Municipal value is 23,000 per month. Take the study material, na. Municipal taxes paid is 8,000. The house construction began in April 2013 with a loan of rupees 20 lakhs taken from SBI Housing Finance Limited at the rate of 9% per annum on 1st April 2013. The construction was completed on 30th November 2015. The accumulated interest up to 31st March 2015 is 3 lakh 60. On 31st March 2020, Purna paid 2 lakh 40,000, which included 1 lakh 80,000 as interest. There was no principal repayment. Prior to this date, compute Purna's income from house property for the assessment year 2021. First point, assessee is Purna, Mrs. Purna. And the story pertains to previous year 1920, assessment year 2021, determination of income from house property. Income from house property. There, this house property was self-occupied. It is given she stays with her family in the house. Self-occupied. For residence. It is self-occupied for residential purpose. When it is self-occupied, you should know net annual value is nil. That means municipal taxes is an irrelevant piece of information. It is irrelevant for us. The only one thing is interest on borrowing. We'll come to that. Note. One. Municipal value fair rent information about municipal value and fair rent is irrelevant since net annual value is nil. Since the net annual value is nil, that information is waste. Information about municipal taxes is also irrelevant. Because net annual value itself is regarded as nil. So the only thing that is relevant is interest on borrowing. Note number 3. Here interest attributable to pre-construction period, attributable to post-construction period. Already we have seen in this illustration what is pre-construction period, what is post-construction period. You all know pre-construction period ends on 31st March immediately preceding the date of completion of construction. Completion of construction is on what date? 30th November 2015. Immediately preceding 31st March is what? 31st March 2015. What is the interest attributable to that period? It is 3,60,000. It's 3,60,000. Now, what is the treatment of this interest? Space is not there. Connector A. I'll continue. Here, A. A, this 3,60,000 is deductible over 5 years. Beginning from the year in which construction got completed. Construction got completed in 1516, 1617, 17, 18, 18, 19, 19, 20. 3,60,000 divided by 5. 72,000. This is the reduction in each of these years. This is the treatment of pre-construction period interest. Post-construction period interest is 1,80,000. And this is pertaining to previous year 1920. So, aggregate of pre-construction period interest installment interest 1/5 plus post-construction period interest is 72,000 plus 1,80,000 will give us 2,52,000. 2,52,000. This 2,52,000 is restricted. The loan was taken for purchase of the property, construction of the property. The loan is taken on or after 1st April 1999, and not only that, the gap between the end of the previous year of borrowing and the date of completion of construction is within 5 years. In that case, the ceiling is 2 lakhs. The ceiling is what? 2 lakhs. The deduction is restricted to 2 lakhs. Under 24 class B is rupees 2 lakhs. This 2 lakhs, we claim it as a deduction here. There will be loss from house property. How much is the loss? 2 lakhs. Apart from that, note number 4. What is note number 4? Housing loan principal repayment. Housing loan principal repayment. How much? The housing loan principal repayment is 60,000. This is eligible for deduction under 80C, subject to conditions. Subject to conditions. This is how the problem is to be solved. 2 lakhs. Then, is there any question that we did not solve on that day? Illustration number 4. Next is, we will take illustration number 7. Srimati Rajalakshmi owns a house property where? At Adyar in Chennai. Municipal value 5 lakhs. Fair rent 4 lakh 20, standard rent 4 lakh 80. There is no standard rent control act in Tamil Nadu. But still, they are assuming this way. Anyway, property was let out for 50,000 per month up to December 2019. Thereafter, a tenant vacated the property and Srimati Rajalakshmi used the house for self-occupation. Rent for months of November and December 2019 could not be realized in spite of owner's efforts. All conditions prescribed under Rule 4 are satisfied. She paid municipal taxes at the rate of 12% during the previous year. She had paid interest of 25,000 during the year for amount borrowed for repairs for the house property. Computer income from house property for the assessment year 2021. So illustration number 7. With this we are closing today's session. Illustration 7. Facts. Previous year 1920, we are dividing that into two parts. Let out period. Let out period is from to 31st December 2019. 9 months. Self-occupied period self-occupied for residents, that is from 1st January 2020 to 31st March 2020, 3 months. This is self-occupied. But note, this property will not get self-occupied property benefit. This property is not entitled to self-occupied property benefit since it was let out for 9 months in the previous year. It was let out. So now in this case we need to compute the determination of income from house property. Srimati Rajalakshmi previous year 1920, assessment year 2021. First step is reasonable expected rent. Municipal value 5 lakhs, fair rent 4 lakh 20, higher is 5 lakhs. Compare with standard rent 4 lakh 80. 4 lakh 80 is the reasonable expected rent. Annual rent. Had the property been let out throughout the previous year, what rent we would have received? 6 lakhs. We would have received 6 lakhs. Fine. Next is we need to compute actual rent received or receivable. actual rent received or receivable it was let out for 9 months, so 4,50,000 minus there is unrealized rent. Rent for November and December could not be realized. Unrealized rent is 1 lakh. There was no loss due to vacancy. 3,50,000. So actual rent received or receivable is 50,000 into 9, but minus unrealized rent 1 lakh, 2 months. 3,50,000 is the actual rent received or receivable. 4. Observation: ARR is less than RER. Why? Are we charging lower rate of rent? No. Is there any vacancy? No. So reason for ARR being less than RER is other factors. Not vacancy. Not vacancy. Vacancy is not there. It was either self-occupied or it was let out. So gross annual value is equal to RER, which is what? 4,80,000. Municipal taxes 12% of municipal value. 5 lakhs into 12%. 5 lakhs into 12%, 60,000. Net annual value 6 minus 7, 4,20,000. Standard deduction under 24 class A, 4,20,000 into 30%. 1,26,000. 1,26,000. Then interest on borrowing. Interest on borrowing, she paid interest of 25,000 during the year for the amount repairs etc. For whatever be the purpose, interest is allowed as a deduction, 25,000. No ceiling. We are not enjoying self-occupied property benefit. This is as per 24 class B. Income from house property is 8 minus 9 minus 10, which is 4,20,000 minus 1,51,000, 2,69,000 is the income from house property. Let us verify, are we getting this? Yes, 2,69,000. Okay, with this we'll close today's session and stop here.